economies are reopening, aren't they? So
Yeah, apparently.
there is some movement going on. There we go. Okay, we are live on YouTube, and good morning to you, Jeff. Good morning to everyone
Happy
out there
days.
too.
G'day, Ash and all.
You have a good weekend, mate. We're just sort of saying we're just trying to get our heads back in the right place.
Yeah, I've been on the road all weekend, mate. We've been right up to almost the very tip of Tasmania up on the northwest there, which is about as far away as you can get from where I
Oh,
live
oh, that
on the
sounds like a
island.
song. The tip of Tasmania.
Yeah, pretty much.
Yeah.
And yeah, not long back actually, a little bit on the weary side, but just opened the chart, so I haven't really got a lot to contribute at this stage. But maybe I had a couple of ideas yesterday when we were doing the analysis show, and Dolly Yen's one of those. I'll go through that a little bit later. And of course, we've got the
Fantastic.
pound trade coming up, and that Kiwi weekly trade that we took a couple of weeks ago was triggered on Friday as well. So there's a bit going on.
Oh, brilliant, mate. Well, we'll get to all that stuff. The FTSE. Good morning, by the way. Good morning, Helen. Good morning, Swee. Um, good. Yeah, interesting movement on the FTSE and actually on global equities in the end last week. We had this really interesting inverted head and shoulders forming on the S&P, and I tried to pick it up, but I just mistimed my entry, and it just ended up so I didn't end up holding on to it. No, it wasn't the S&P obviously I picked up, but I was watching this one. But I yeah just mistimed my entry a little bit on the FTSE, mate, and it's popped up. I mean, initially. You have to look for downside, which I did, and that obviously turned around. So as soon as it turned around, I was looking for upside, and I grabbed a little bit out of it, but nowhere near enough. And now it's popped right forward, and I suspect we're probably going to go again, but we need a pullback. So I'm waiting for weekly pivot test, maybe daily pivot test, but I'll show you in a little while. That'll put the structure under a bit more pressure. But if it comes back to the weekly pivot, I'm going to be a buyer. So I'm looking for around about a 60 pip dip, and if I get it, then which is it likely? Probably not. But if I do get a 60 pip dip, then I'm picking up here. But after you've done the pound trade, mate, we'll get to reasons why it may come back there, and then we'll see if we have got a trade today. But at this stage, I'm wondering whether there might not be a trade on, but that's fine by me. But let me pass you the screen, and you can do the pound trade, and then we'll come back to this.
Rightio ho. Um, Host disabled participant screen sharing. This happened last night and went absolutely ballistic. And I'm not sure what the fix was.
I'll show you how to stay in it in a little while, Helen, as well. We'll talk about that.
So at this stage, I can't share the screen.
Oh, you can't share the screen. Okay. Do you want me to do it from my end?
If you can, mate.
Yeah, you can talk me through. Right, so we're looking at the pound. And we can bring up a clean chart here.
I'll just place the orders whilst we're talking about it.
You place the order. You give me the parameters while you're doing that. That'd be fantastic.
All right. At this stage, we're trading only the last bar because it is the range of the last three candles.
Is it the hourly we do this on?
Yeah.
Yeah. Okay.
And it's a very narrow range, so we may have to get in. The entry level is going to be 1.2130. That's for the long.
1.2130. Yep.
Yep. And the stop loss for that will be, as it just disappears from my screen, will be 1.2081.
Okay.
And that will give us a short, of course, of 1.2081 entry.
So short. Oh gosh, I keep doing that one. Short. And this one is entry. Yep.
And the stop
sorry,
loss
1 point. What was this? Was the short entry is
1.2081.
081. Yep.
Stop loss for the short is 1.2130.
1.2130. So let's just double check these. So entry, I've got the long entry here, short entry there. So that means the long entry 1.2130. That puts us in there because we're going 10 pips above. Where are we going, mate? 10 pips above this high bar here?
15 above the high
Oh,
of the
15.
bar.
Yep, yep.
And 10 below.
And 10 below of the bar.
Yay.
And that's also the entry, I see. It's actually quite good doing this because I always hear you talk about it, but I'm usually in the midst of a
doing
FTSE
something
market
else.
open. Yeah. There we go. So that's that. And then that would be the short, and then the long, the short. Oh, I see. So they're basically they're the same thing. One cancels other. I got it. Okay.
Yep.
So there's our range for the day. And we'll see what happens there. Right, let's talk about the FTSE then, and we'll come back to this in a moment. The FTSE is it's there's every chance the FTSE continues to pop forward. I'll tell you what I'll do is here. No, we'll do this. Copy that. Right, so the FTSE's in a sell zone here. But do we want to sell it? Well, probably not. I mean, the way the market has popped forward so far, we're at DR2 and looks like it should come down from this point. Really, we want to go long, so we might have to just wait on this, just in case it pops forward and keeps going. There seems to be quite a lot of confidence out there, just because of the economy starting to open back up again. Right, let's talk about firstly how you stay in this trade. This was a new experience last night with Zoom. What was that then, Jeff? How should we manage the CAD Swiss trade we took last week? Okay, you can come to that in a moment, mate.
Yeah,
so firstly, let's talk about staying in. Now, Helen, did you get in on? Just talk me through your entry a little bit. Let me just see what. Yes, S&P managed a 1 hour this morning, but didn't know how to stay in. So let me just see what you may well have traded this morning. So this morning, what were you trying to do here? Could you give me your entry price and your stop loss? I just want to see whether you just see what time you might have got in at for one, and how you would stay in this trade. The thing about staying in trades is that it's really all about, so it's all dependent on, you have to read what kind of strength the trend is and what kind of trend you have. So when you take an entry, okay, 28.79.93, 28.79.93. It might be slightly different than mine. 28.79. Okay. Okay. So okay. Okay. Let's just have a look at this firstly. Now, the first thing that I would say is your price is kind of high. Let me just bring this on. This is probably what you were trading. Oh, actually, I mean that's a pretty good. It's pretty nice. You got a nice bounce there. Really though, you're not trading the hourly here, because if you were trading the hourly, the pullback would be deeper. Really, on a chart like this, you're trading. It's more like a 15 by the looks of things. Yeah, you're really trading the pullback on the 15. Now, if you're trading a pullback on a 15, then you are using a 15-minute time frame for your exit strategy as well as your entry strategy. And what you have to ask yourself is, where does the trend change on this time frame? And when you find out where the trend changes on this time frame, that will dictate how long you can stay in the trade for. So let's see what we had. Yeah, you see stops should be at break even at this particular stage. You'd be okay with stops at break even. Well, maybe not quite yet, but within the next hour, you'd have stops shoved under this level just in case things turn around. Doesn't look likely, but just in case things were to turn around, you'd have stops at that particular level there. But yeah, it would have to probably. I don't even know whether that's the right one. Let me just see. Yeah, I think it is actually. Yeah, I think it is. That looks like the trend right there. So you'd have to use the 15. Now, the reason that you're not trading an hourly trend, when we look at this hourly, is that you are where did the hourly break through to change trend from the downside to the upside? And it changed here for sure. You know, that's one argument there. But also, it's a little bit caged on this neckline. Now, I presume you can see this inverted head and shoulders here on the hourly, which is here. This is your inverted head and shoulders there, right? There's the left shoulder, right shoulder. So that means this is the neckline. Now, for you to be trading the hourly, it needs to be down here. You know, that's the hourly line down there again. It's not up here. This becomes something different. As I say, that's really a 15-minute trend you're trading, because for you to trade an hourly, you're looking for a test of where it came from, and it hasn't happened. So when it comes down here, then you'd be looking at the long. Now, to be fair, because you are trading at 15, then you know you're going to have to keep those stops pretty tight. If you were still in, I know you're not in now, but if you were trading at 15, you'd have to keep those stops pretty tight, and it does mean that you're running really along this little move that's going on here. You know, that's probably where you're. I was looking down here a minute ago, but it's probably here actually. So you're looking along there. Let's see what that looks like on a 15. Yeah, that's what it would suggest. So actually, you wouldn't be out the woods just yet anyway. You know, there was a suggestion that this probably would come and take you out. So yeah, I don't think you would have lost anything with this. I think there's probably, because of what we just saw with the hourly, the idea is that it's probably likely to dip at least a little bit. But you know, this is the area that people are really looking to pick this one up. Not on this not on this little move here, but on the retest of the hourly pattern instead. I suspect that's probably what people are going to look for. That's all right though, Helen. I think you've done pretty well there. Oh, sorry. Of course, it's the third Monday trade. Of course it is. Yeah, gotcha. Okay, completely different. Completely forget everything I've just said. The third Monday trade is a completely different scenario and situation. Completely different. The third Monday trade, you're just buying in. So yeah, no worries on that one. Yeah, you're looking at the 25 pip stop loss, aren't you, on the entry, which would be probably just about safe, I would have thought, on entry. So yeah, sorry, I didn't realize that's what you're talking about. The third Monday trade is a completely different strategy. So with the S&P, we're looking at the same thing with the FTSE, you know, for a bit of a dip down. And let's see what might cause that. So let's just check the news for the week. Let's see where we are and what the sentiment is for this week and what's going on out there. The Fed Chair Powell has spoken, and I think he was talking about deep contraction in the economy, but we all know that, and the market continues to pop forward. Nothing when it comes down to anything else for the day, so it might be a little bit choppy today. Choppy to probably with a bias to the upside if it comes back. UK has got numbers. I tell you what, mate, the pound has been obliterated, isn't it?
Yeah, it's
Absolutely obliterated. Yeah, it's and it's probably going to keep going. Fed Chair Powell speaking tomorrow, so that may be something that could cause a couple of ruptures, and then we got actually, you know what, looks like a pretty quiet week for data points, but lots of governors speaking. Bank of England, Fed, Aussie. Lots of news from the UK. Again, Fed Chair Powell's out on Thursday. And then we have a slew of data from from the EU, but again, it's monetary policy minutes. So it looks like a bit of a central bankers week this week, mate. I don't see how that really creates too many lovely opportunities for a trend. I suspect we might get caught in a bit of a range with a bias to the upside. FTSE is just it broke out, but it's just starting to struggle a little bit, and I would like to see it struggle here and maybe create something of a reversal bar. And see if we can drift down into this area. But I think it's going to be a tough week. I said it on the show yesterday. I think it's going to be a bit of a choppy week, and I'm just not keen. I have to say, mate, I'm not keen at all. Interesting, really, when I was looking at the movement to the downside last week, where we took profit pretty much at the lows. You then switch to your daily chart. And this is something that you were saying the other day about switching to your longer term timeframes for clarity. Look what we have. I mean, it's just it needed to take this area out, because really what ended up happening was that we had this low, we had this lower high here. So yes, this is a lower high in this area, but this is our low here, and we didn't get a lower low. So really, all the market has done is kind of stayed within this kind of area here, and that kind of suggests that that support has held, and there's every chance that we try and hit these upper levels again, or at least an upper trend line there. So, if nothing puts the market off, I wouldn't be surprised at all to see us higher rather than lower, even though it does confound a logic to a certain degree. But there's the trend line there on the daily chart. So when we switch that to the 4-hour and we tighten it up a bit, this is where we are. We're in this sell zone here. And if it decides to take out of that area, then we again, we're going to have to wait for a retest and make sure it's not a false break. But so far, we haven't had a test of this little breakout area here. So I am looking for a drawdown, but it might just be a real difficult market, and then all of a sudden we get some significant movement. But I'm not going to get involved at this stage, mate, to be honest.
Right, bud. No dramas. Not like I'm having technological dramas here. I haven't got any Telegram. I haven't got any YouTube. It looks like I'm having a complete meltdown. I don't know why. Now this fix for screen sharing. Apparently, what happened last night was the host has to shut the whole thing down, and everybody has to be logged out of Zoom. But the only guys in Zoom are you and I.
Yeah.
Which means we're going to crash the whole thing, and then start again to fix it.
Okay.
So
all right.
That apparently is the only way to do it, or we can shoot through on your charts today and see if there's another way around it. Whatever suits you.
All right. Well, let's see. G'day, Lewis. What we got? Let's just get to some of this. Just Alan, the market turns bullish again. Jerome Powell talks up the market. If he talks up the market, then it probably will go a bit bullish. But good morning, Emmanuel. How are you doing, buddy? Just the thing with PH. I was just reading this thing but got one running for PH on a daily wave rider. Is that on the S&P, Helen? I'll have a quick look at that. If that's on the S&P. So I don't know how in depth it will be with the chart. It's probably better that we just crash it up, mate, and just start again. It's no big deal. Is everybody all right with that if we just crash? Because Jeff at the minute can't
share screen.
We can't share screen and S&P. Okay, cool. All right, I'll check that in a second. Yeah, does everybody mind just logging back in? Yeah, is that all right? Okay, so we're going to log out. I've got to crash in because Jeff can't share screen. So in fact, let's just try once more, mate. I'm just going to pass it over to you. And are you able to grab that?
Okay. No, host disabled participant screen sharing. So I'm sure you haven't done that. But apparently what you have to do is when you come back, share your screen before you go to YouTube.
Okay, let me just see.
Which you probably did in the first place.
Who can start sharing when someone else is sharing? Let me just see if I can do this a second.
Mm-hmm.
Oh, I see. You can do that as well. Okay, let's see if that helps. I will share, and then I will stop sharing. Right. Can you do it now?
Yeah, I can.
There you go.
What'd you do? You're a genius.
I just gave you the screen. All right, no need to crash, guys. We're all good.
How did you fix it? Because I've got to report
Uh,
this. This
that's
is
okay.
very important.
You go to share screen, and then it says who can share. And because there's only the two of us in, I can put all participants and who can start sharing when somebody else is sharing, and all participants. I think if there are other people in the room, you can't do that, but it's only you and I.
Okay. All right, I'll let PB know that after the show. Righto, so what are we looking at? That's a good question. Haven't caught up, but I do need to have a look at CAD Swissy. CAD Swissy I need to have a look at, don't I? Okay, pound, nothing doing on the pound. CAD Swissy, we need to go to this chart. And where have I got CAD Swissy? Pound Swissy. Sorry, guys, I'm way behind because of the weekend. Okay, so we're still in negative territory here on 17 pips down on CAD Swissy. So our entry was here. Okay, got it now. Weekly pivot has stepped down. Yeah, we've got to get above this trend line again, haven't we? So if you're asking me how to manage it, what I would do, I'm not going to do anything right now, but I would suggest if you're going to bounce off this trend line again at the monthly pivot, there's probably going to be some more downside that may even go to take out stops. But I don't see any real reason for that to happen in terms of the chart. Let me have a look. Kind of in no man's land, isn't it? You can see it's up and down across the monthly pivot and really doesn't know where to go. We could be here for a month, frankly, in this particular range. I don't suggest we will, but it's entirely possible. So if you're uncomfortable with being in a negative position, what are you down? 18 pips of 54. So you're down 1/3 of whatever you risk in the first place. So if you're uncomfortable, as always, just get out. It's no big deal. You know, it's not the end of the world. But there's still the potential, and there's no reason to think that we can't go back to the top of this range at this point in time. In fact, if we got back here and retested, there's probably another scaling point there for me, but you've got to get risk off the table first, and that's not an option at the moment, obviously. So that's how I'll be managing this. We've had quite a few attempts to get below this level. That doesn't mean it won't happen. But what it does mean for now is we really are guessing as to what's going to happen next until we clear this area. We've got to close above here. You start to feel a little bit more comfortable if that was the case. And if we close below here, you're probably going to feel a little less comfortable. So as always, as I said, if you're uncomfortable, get out. If not, then go with the flow. If you've gone in at a risk that's, and that's probably the discomfort level, if you've gone in at a risk that is too great for you, and I've only gone in at what, 1/4% or something, so I'm down 1/3 of 1/4% right now. That's nothing, you know. It's no big deal compared to what we've been through in the last month or so. So yeah, I've got no qualms about hanging on to this, and really the only thing that's changed is that we've now come below the monthly pivot. If we fail to get back above it, then there's probably room for concern, and we've got an hour and 40 minutes before that would be the case. But until that happens, let's just hang in there, in my humble. Now, another one I did want to have a look at. I said we had been triggered on the Kiwi on the weekly chart. That's this trade here. It's coming back at us. Guys, are you still in this? Or did you guys hang on to this trade? Remember, we're trading this bar here from what, 1, 2, 3 weeks ago now, when that bar was printed. We placed an entry short underneath it with our stop loss above it, and we have been triggered into that. The reason I ask is I thought I had this on an EA, but it's not being managed at the moment. So I would imagine that we should have taken TP1 around here somewhere, but I also haven't got on my screen the parameters that we use. So if anybody is in that trade, Can you tell me if we've hit TP1? I've got a funny feeling we would have, because I don't think I would have traded beyond that point. Maybe I went down to here. Difficult to say. But if somebody could let me know that, that would be good. This one looks okay to me. And the pivots, that's the word I'm looking for. Pivots are now well above us. So we've got a fair bit of resistance in our favor. Of course, we've got to get through the bottom of this range, but I'm okay with that. So this one looks all right. A little retracement back to weekly pivot or monthly pivot, that's quite on the cards. If that were to be the case, then that just adds to the fuel for this short, in my humble opinion. And I don't think the Kiwi's got a lot of strength at the moment, that's for sure. And the dollar, well, for whatever reason, and I guess we all know them, the dollar is still a little bit on the strength side. Now, that's what I wanted to show you. Those who weren't in the show last night, have a good look at this bar that we did trade on Kiwi US dollar, this one here, and then compare it to this bar here. This one. Do you see any similarities there? I'll show you again. That bar there versus that bar there. You should be able to see the distinct similarities between Kiwi US dollar 3 weeks ago and US dollar yen as it closed on Friday. Now, that aligns with everything else as well. So what my thought process here is, if it was good enough to trade the Kiwi, it's also good enough to trade US dollar yen. Now, with the dollar strength, that is probably the only question mark. But this has actually got more credentials, in my opinion, from a technical perspective than does, or than did, Kiwi US dollar. Now that range obviously is on a smaller time frame, but you can see what's happened here. Come off the top of the range, come off the bottom of the range. Then we went back to the top. Then we put in a lower high, which is what we traded last time we were in dollar yen. And we closed the trade in here somewhere, as I recall. And now we've got an opportunity to get back into the trade by trading that bar there. And that's exactly what I wish to do. That we've come below the monthly pivot and retested it and rejected it with this bar makes it all the more appealing, in my humble opinion, again. So I'm going to trade that bar. Again, it's on a weekly chart. So if you, let me get rid of that. If you have the means of staying in this for, and it may take a week, maybe 2, maybe 3, like the last one did to trigger, but I'll definitely be placing this order, and I'll do so now. The entry will be 106.43. And the stop loss, 106.43. Stop loss will be 107.83. So 106.43, 107.83. And 107.83. And I'll just leave that there and type it up for you guys. Okay. US dollar, Japanese yen, weekly. Sell at 106.43. Stop loss 107.83. And we want a TP1, don't we? All right, I'll just get rid of that, place that, and let me find a TP1 for you guys. What are we risking? 140. Let me see what we've got. That looks pretty reasonable. I'll go with that. We will call it 105.43. We'll just go 100 pips, eh? So 105.43 will be TP1. There we go. Right, mate. That is dollar yen. We've covered dollar Kiwi and we've covered CAD Swissy. Let's have a look and see what's happening with the majors here today.
Yeah.
Euro US dollar on the, geez, a mess. Euro US dollar on the daily chart there, but is putting in, well, you could best describe it as a descending triangle, in my humble opinion. Let me show you that. So you could come off here. Or you could come off here. We'll come off here. And we'll go through there. Actually, no, we should have started there. We'll go through there and we'll stop it around about that level. And we'll go down through there. Okay. There. There. There, pretty close. All right, you can see the structure, and now all I see is, okay, we bounced off the bottom, potential for a higher low there. Gee, it's scrappy and messy, and we're right on the pivots, as you can see, daily and weekly, very, very close together. And if you've been listening to me in the last weeks, you'll know that when I've got a mess like that, I just need to step aside. So I'm not the least bit interested in trading Euro US dollar at the moment. If we get down to here, then I'll be looking for a higher low. If we get up to here, I'll be looking for a lower high, or I'll be looking for a break back underneath retest, or a break back above, and again, that higher low. So not interested in Euro G. I reckon it's a bit of a mess, to be fair. Now, dollar yen we know about on the weekly chart. What about today? Well, really, got a little bit of a channel going on there. Wonder what that looks like. Oops, not what I meant to do. Yeah, that's kind of there. So we've got a couple of boundaries here. We've got the top of this channel. We've got the monthly pivots. I think that's probably good enough to say that I don't want to go long right now. But if I have a look at the smaller time frames, I can also see that maybe we have to get there before we look to go short. So let's have a look at the hourly chart, for instance. Do we really want to trade up to here? Well, there's a nice little trade line coming through there that's offering resistance there. So we want to be trading long at the moment. There's probably only this from a support point of view. So I think we're in a bit of a tight hold here as well. Yeah, I don't see anything there, guys, that really entices me, I've got to say, either. So let's move on. Aussie. On the daily chart, the Aussie is a very interesting currency pair at the moment. Pardon me. Aussie dollar. I can make a case fundamentally for either way, I think. And technically, I can still make a case either way for that as well. The reason that I think we still have some puff left in this to the upside is that level there that we failed to reach. And you guys, I've spoken about this quite often, I'm sure. We've since put in, well, a lower high. this is starting to look a little bit rangy as well in here. Let me put that in. Doesn't actually look too bad. Maybe that's the play on the Aussie. Keep it nice and tight in there. So it's begun, right? 2 highs, 2 lows. I think we can start looking for higher lows here, or breaks and retests, one or the other. I still think the monthly pivot needs a test, and that hasn't happened. But if I go a little bit tighter on this screen, you can see that we've essentially got a double top here, and go back wider again a little bit. You can see that that double top is at, I wouldn't say a super duper resistance level, but it's on the top of a rally. So there is reason to think there's potential reversal on here. I don't see that from a trading point of view right now. But if we were to get back up to this level and put in a lower high, then I'd start to get interested in that. So maybe that's what we're looking for in the first instance. And then the monthly pivot test, and thereafter, goodness knows what. From a fundamental point of view, as I say, the dollar is strong at the moment. The Aussie has got reason to be bearish, and I said it yesterday with Scott Morrison versus Xi Jinping in this potential trade war that's developing, or is it just huff and puff? But if they really went into a trade war, Xi Jinping versus Scott Morrison, I think there can only be one winner there, frankly, and it won't be Scott Morrison. So the Aussie is under pressure for that reason. But I just wonder how much reality is in that little skirmish that we're having, or our verbal skirmish that we're having between that pair, because both of them rely upon each other very, very heavily. China for raw mineral supplies out of Australia, and Australia for just about everything we consume. I would have to say, certainly from a clothing point of view. It's very, very interesting, this little scuffle that's going on between Morrison and Xi Jinping. Anyway, so for now, yeah, look, not really interested in having a good look at a trade. But if I go to the 30-minute chart, we can see that we've had a break of daily pivot, retest of daily pivot. We're snuggled underneath the weekly. Maybe this is where we're going to spend a bit of time in between the daily and weekly in this session. That does appear to be a likely scenario. For the shorts, what I can definitely see here is the potential for a rally to the weekly pivot, sneak back underneath it, maybe even underneath the daily pivot and retest it. That would be a short signal. On the other side of the coin, you could use that line there, or you could use that line there that goes through this level. I'll keep it tight. And again, exactly the same as we discovered on Euro US dollar. We're in a little bit of a wedge situation here, and there's really nothing too concrete to trade in my humble again. Pound hasn't triggered. Oh, okay, let's do a little bit of analysis on the pound. As we all know, it's under extreme pressure, has broken clear of most support levels, and is in strife. And I don't know what turns this around. So yeah, it's very, very difficult to think anything other than pound for sale, really. But from a technical point of view, there is this level to contend with coming up.
You know, mate, it's going to be all about Brexit with the pound, and because the reason the pound is weakening is that the Brexit negotiations have started again, and they've effectively drawn another blank, which they always do. They do until the
what's new?
Till the 12th hour, they kind of, or the 11th hour, they seem to draw a bit of a blank. So yeah, I suppose if there's a glint of some kind of hope that there'll be a deal, a decent deal between the EU and the UK, then the pound's going to struggle.
Yeah, and technically it's still got 100 pips to fall before it reaches any sort of strong support. So yeah, if you're in a pound short, I wouldn't be thinking getting out of that until probably 120.20, around about the one, maybe even the 120 mark. But yeah, that looks to be an obvious little pause point. So yeah, not really intrigued when I look at that chart. That's dollar CAD I can see exactly the same as I'm seeing on every other chart. We're seeing lower highs and higher lows. That doesn't really get me excited. Dollar Swissy, as you can see, really in the middle of that range there. Double top, back to the bottom, back to the top, having a little bit of a play with the monthly pivot. Essentially, we're getting another little range in here, I suppose, but it's getting pretty tight. I can't see anything, Ash. The more I look, the less I see, frankly. Again, we're
Yeah,
getting lower highs and higher lows. We're pinching out on all of these pairs. Yes, they'll break, but anybody's guess as to where, I think.
yeah. I'm just having a look through some stocks here, and the Ocado trade that we took last week is doing really well. I mean, we picked out Ocado as something that would struggle. If people started to come out of lockdown, and out of 100 stocks on the FTSE 100, Ocado is really only one of two which is down, and it's down 2%. So in fact, maybe one of five which is down, but there's only five stocks that are down, and Ocado is one of them. So I can't remember who was in with me with that. Was it Swee in that one? But there was somebody else was joining me with that one, and we're doing pretty well with that one. So
Cool.
I'm looking at stocks, and I'm just thinking. Might have been Shukri actually. I can't remember. I'm looking at stocks, and yeah, it was you. I thought it was you, Shukri. Sorry. Yeah. Are you still in that? Because there's a really interesting play on Ocado, and I don't want to kind of exclude people from trades that they can't get in. Good man. But I think it's worth talking about, mate. If we haven't got anything else, I think it could be worth talking about.
Yeah, I
Um,
just found the parameters on this Kiwi trade. So TP1 was at 61.30, and we got it as low as 59.30. We got as low as 59.20. So you should have taken TP1 on that Kiwi US dollar on the weekly trade. This one here. Now, hands up, who stayed in the trade? I'll bet there's not too many because it was 3 weeks ago. But we did say hang on to that until it was filled. Either way, filled or stop loss, one or the other. And I can't see any questions or answers, mate, because I can't get into YouTube for whatever
oh,
reason.
that's okay. No, nobody's put their hands up.
Yeah.
Shukri got out at 9:59:40.
Got out.
Swee's in. Brian's in. Greg's
Okay,
in.
cool. Oh, cool. Okay.
Fads. Mine was take profit one. Yeah, there's a few guys in with you, mate.
All right, happy days. Well, let's hope that sinks to where it belongs, down here somewhere, which is our target area. Our second target was 56.58. Long way from here, of course, but
Ace is
yeah,
in.
that's right. This level here. Okay, cool. All
Yeah,
right.
you got a few in there, though, mate.
Well, a long way from home, but there's no risk on the table right now, so that's all good.
Yeah, yeah, can't be bad. Can't be bad.
So you want to have a look at your
Yeah,
Ocado?
just generally, I think it might be worth looking at, just changing tack slightly, because there's always this is the thing, there's thousands of products that we can trade on a daily basis, and rightly we kind of we look at what this what a specific broker provides, but actually, you know what, if you sort of if you go around and start fishing around a little bit, then there's loads more things that create opportunities, and it does mean that there are opportunities literally every second of the day, really. Depending on what you're willing to look at. And we were trading Ocado because we saw that Shukri and I saw that Ocado was at a potential level of not a potential level of resistance in some respects. It was a pretty bad level of resistance, but it was a fantastic setup, really. We had a really nice candle, which was on the hourly chart. So we didn't mess about with this one. We just kind of got straight into it. So let me just get this down here a little bit. We took this bar here. I don't know how clear this is for everybody. But we took this bar here on the hourly, and that's 2050 to around about 21. So it's about 75 pips. Now that one is up 100 and well, almost 150. Let's call it 140 pips. So it's already a 2 to 1. And now it doesn't really matter about the setup. That really this is about how can we start thinking about what might get affected during certain environments. And the thinking behind this one is because Ocado is a food delivery service effectively. They're like a mobile supermarket that was obviously going to do well when people were in lockdown because all people wanted to do was get everything delivered to their door. So when we look on this on the daily, in fact, let's look at this on the monthly. On the monthly chart, you can see that this is ranging back to 2016. We are at all-time highs, bang and then bang this month. Now, when we come out of lockdown, there's a huge suggestion that this is going to come back and at least test this area, but at very, very minimum. So that's the reason that the trade was taken in the first place. There's chance that we could get some sort of bounce, but we're thinking about profits here. Can Ocado make the same and sustain the same profit if people are effectively going to start using supermarkets? Probably not. So it gives us two opportunities here. While we are short Ocado, we can now cover the sector by going long in another with another supermarket. So we could maybe go long Tesco. Tesco isn't having the best day today, but if you look at Tesco in comparison to Ocado, then Tesco's nowhere near its highs. Looks like an inverted head and shoulders might be being created here. Tesco could be an option. Morrison's could be an option. So that's one thing you can do. While you've got a short Ocado, you can add you could go into another supermarket on the long side, keeping the Ocado short, making sure that whatever percentage. And you're trading the spread. I don't know whether this is going to start making confusing people a little bit. So let's not go too deeply into it. But you are trading the spread. What you are saying is from this particular point, on percentage terms, Morrison's will outperform Ocado. So if they both go up, as long as Morrison goes up by a greater percentage of its price to Ocado, then you're in the money and you're making money. And with Ocado's weakness, and if they go down, because you are short Ocado, you are saying that Ocado will go down percentage-wise greater than Morrison's. So, and if the overall market goes up and they both go up, you're covered. So you can hedge against the position with that. That's one aspect. But then the other thing to do now is to think, where are we? What kind of position are we in? Well, we're coming out of lockdown. Now, even if the market goes up or down, what gets affected if we come out of lockdown? And the other one I quite like is Just Eat, because Just Eat has done pretty well. A takeaway company. It's done really well. Again, that's month over month, so you can't really garner too much from that. It's week over week. Let's just go to the dailies. So again, at all-time record highs on Just Eat. Is Just Eat now? There's no reversal pattern here, so there might be some further to travel with Just Eat. But is Just Eat going to do as well if we start coming out of lockdown? Are people much more likely to start going out and enjoying meals in restaurants? Are they likely to cook at home? Who knows? But Just Eat looks like another potential play for some downside. Now, if you are interested in upside, then who suffered, during this whole period, who suffered? And it's obviously, the travel and the airline stocks. So can we now start looking, or is it too early? It might be too early, but certainly we need to be on the lookout for this stuff, which is why I'm bringing it to you guys now. We should be looking at how do travel operators now come out of this. Look at EasyJet. I think EasyJet's a fascinating looking chart. We got a level down here, just about gave way, but it bounced away, and we're basically back at this same price point now for around about the £5 £5 mark down here. So £5 per share. And when we look at the all-time highs in EasyJet's up here at £18. So this one really could. Even if it doesn't have to get all the way up there, but over the course of the next 10 years, if things get back to normality, EasyJet could quite easily quadruple in price. And even if it just finds this level of resistance here, it's almost a double in price. You know, it's you know, and that could start to really move fast. So I think EasyJet's another fascinating one in my opinion, mate. And I'm looking at this on a 4-hour chart here. Looks like there's a little. I mean, the shares aren't the easiest things to analyze because there's gaps everywhere. But in some respects, we're not really doing the analysis on the chart. We're doing it on the fundamentals. You know, what could change this? If we come out of lockdown, I think there's a pretty good chance that the airline stocks do quite well. So, you know, just to kind of bring to people's mindset that you don't have to just look at what you're looking at with the with currencies and with indices. You can kind of like get a bit more niche and a bit more nuanced and have a look at what might do well in this kind of situation, what might actually do badly, you know, what might well turn around. And you can look in your own domestic areas as well. Prefer Waitrose and Morrison's, Tesco's in terms of movement. Good, perfect. I mean, there's nothing wrong with that, is there? I mean, you do kind of want to like what you're buying, what stocks you're buying. Yes, so you can go long something else exactly, and that's hedging. That's hedging. It's a classic long short strategy where you buy, and what you're doing is you hedge out the sector. So if the sector does really badly, they'll both do badly. If the sector does really well, they'll both do well. And what you're basically saying is that this is going to do better than this, you know, in this environment. Now, it's not always straightforward, so don't get too caught up in it. But I would say with this kind of environment, it looks pretty straightforward to me that a delivery food company is going to do worse than the staples like Tesco or Helen mentions Waitrose as well. We talked about Morrison's. So yeah, I mean, I think Tesco is a you know, that's the stalwart, isn't it? So so that is basically what hedging is. Yes, and that's what you're doing, Alan. With a hedge, you're trading the same sector. I mean, it doesn't have to be a sector, but it does start to get less nuance when less niche when you start going. Oh, I will hedge out I will hedge out the indice. So if the indice does well, I won't lose so much. You know, then you're starting to broaden it a little bit too much. Shukri, well, Just Eat is on the FTSE 100. I think it is in Amsterdam as well, though. Yes, yes, I think it is. Now you can, with a broker, hedge out gold. You know. Well, that's okay, Alan. It's not about whether you use the UK. I mean, I'll bring you the UK because that's the software that I've got. But you don't have to do the UK. You could do the US. You could do wherever you are, you can do that particular stock market. You're just sort of like trying to find the strongest sectors, you know, and healthcare would have been a really good one this time round. You could have bought AstraZeneca and sold, I don't know, some other healthcare stock if you didn't, you know. And the thing is with healthcare, it's really interesting because the healthcare stock that's going to do the best is whoever finds the vaccine, and that's why, you know, right across the board, people were buying healthcare. How do you hedge gold? Right. So the way that you would hedge gold is now. This is the interesting thing about hedging is that with a hedge you trade the spread. Now, hopefully that makes sense. But just to kind of illustrate that, if I can. I wish I had my drawing tool already, but I don't. So if you've got Ocado and you're having it versus Tesco, what you're saying is that Ocado will if they both go up, Ocado only goes up 1% of its price, and Tesco goes up 2%. So with a hedge, you basically you're trading the spread between these two, and because the spread is positive 1%, you make 1%. Does that first bit make sense? I know I've just quickly scribbled it, but does that first bit make sense on how the hedge works? That you're trading the spread of gain between the two. Oh, be careful, be careful, Helen, with hedging. Practice first before you go in. You know, it's do some really good prep. Okay. Okay. Yeah. Great. Okay.
You
So
can mess it up easily. Yeah.
yeah, because you know if you pick the wrong two and you sort of like go, I'll tell you what, I'll go long Ocado and I'll go short Tesco. Then actually, you may as well have just gone long Ocado, and just got stopped out. So you've got to fight. And the other thing about the hedge is that you've got to figure out where the stop on the spread is as well. Some brokers offer it, many don't. So you've got to make sure that you work out that particular maths as well. But it is an interesting strategy. So we're trading the spread now. That means that if we are trading the spread, when you trade something like the euro dollar, then there's already the spread there. So in some respects, it's almost like it is a long-short strategy, aren't you? You're basically saying I'm going long the euro, short the dollar, or short the euro and long the dollar. It's the same thing. What you're actually making is the spread between the two's movements. So if the euro weakens across the board and the dollar strengthens, you make more money than if the euro strengthened and the dollar didn't do anything, for example. So you can't hedge currencies unless you've got the index. Unless you've got the actual index, you can't hedge out currencies because they're already hedging themselves. But you can with gold if you have gold versus another currency. So let's say you've got gold versus the dollar. So this is the gold versus the dollar price, 1730. And the way you'd have to hedge that out is, let's say you want to go long gold, then the way you would hedge out long gold, but you want to go long gold versus, let's say, the pound. You don't like the pound, so you're going to go long gold versus the pound. The way you would hedge out a movement in gold that was to the downside is by going short gold, US dollar. Now, it does seem a bit pointless because what you're saying is that the pound is going to be weaker than the dollar, so you may as well just trade straight off the bat, with dollar pound. But there might be an environment where this could be of some use. I haven't worked it out yet, but there might be an environment where it could be of some use, where you do actually want to go long the metal, uh, and the way you're going to hedge it out is with another currency. You could use another combination. You don't have to go gold. I think these only offer, as far as I can see, gold versus a currency, but I don't know about that.
On Fusion,
Yes.
you've got a couple of options. I think there's Aussie. Hang on, I'll have a look. There's Euro, there's Aussie, and there's the dollar. That's it.
Okay, so it is against the currency, which does make it a little bit tricky. Really, in some respects, you'd kind of
That's
want
gold, wasn't it? That's what you're talking about.
gold. Yeah,
Yeah. Yeah.
yeah. You'd need something to hedge it against. So it does become, and you have to work this out. Does it become a zero-sum game? So gold is moving on something else. Well, gold is its own commodity. So it's not, when we look at the price of gold, we're basically, seeing the price of gold versus the US dollar. But you can trade it against another currency. And, what if you're going to trade gold versus the pound, then you are effectively sort of saying that gold is the the movement in gold is going to also move at the same time as the pound in some respects, but the only way you're going to hedge out a downside risk of that particular trade is if you trade gold against something else. Yeah, gold has gone mad. Gold moved off the dummy. Yeah, I know gold is flying, isn't it? Gold is flying. Gold's still for me a bit of a tricky one. I the big issue with gold is the fact that we are in the worst seasonal month of the year. And Julian made this point yesterday, and this is the thing, you know, I have to kind of bow to somebody else's knowledge with something like gold because I don't know enough about it. Yes, you know, I would have loved to have traded it, and we were looking at a long gold, but I found it hard to justify, particularly because we're in a short footsie and it felt like the same trade. But the difficult thing for me with gold is the seasonal aspect of it. And Julian made the point yesterday that everybody's long gold. You know, I don't know anybody that's saying, let's take a short in gold, which means that if it is to go short, the thing is going to crash. Now, I don't know. Let me just have a quick look at how gold sits. It's still got some room, actually. Momentum in gold is weakening to the upside. Now, that doesn't really tell us too much. The, you know, monthly is well and truly overbought. And if it holds up these levels, then next month it probably will start to fly again. But I've still got a bit of a red flag with gold. But this is where we've got to be careful. You know, we can't go long here with gold. No way, because everybody's long. And if everybody's long, then it could be a very, very painful turnaround if it turns around. You know, if it doesn't turn around, then obviously, you know, it would have seemed like we should have gone long. But truthfully, if we were going to go long, we should have made that commitment a few days ago and just gone for it. But we didn't, or some people did actually. There were a couple of people in the room that did. But if you haven't gone long gold already, then don't chase it. Really unprofessional at this stage to chase this. Look for something else. As I said, there's thousands upon thousands of products out there to trade. And I just worked out with gold. I mean, I've got some property in the UK. And I just looked at gold and I thought, you know, and I've got to look at it against the pound because that's just one last thing on UK stocks. If the pound weakens, UK stocks will probably do pretty well. So there's another reason that there could be some really good opportunities if the pound weakens against across the board. There could be some UK stocks that do really nicely. And again, finding that correlation could stand you in pretty good stead. Right, this is gold. Now, I think I bought my property somewhere, maybe around about 2016 or something. So when we look at this, back in 2016, the price of gold is around about £1,000 per ounce, and now it's at 14. So it hasn't actually doubled in price. Now, if anybody knows anything about the property market in the UK, the property value hasn't doubled in price, but actually when you break down what you would have had to put into the property, so let's say on £100,000 property you put in 25 grand because it's 25%. If the property goes up to £125,000, you've doubled your money. And even though gold's chart looks really attractive, actually it hasn't done anywhere near as well as the property market in the UK. So it's still a commodity which is you know, interesting, but to a degree, in a broader portfolio, it's actually quite sluggish. You know, when you look at it that way, it's actually quite sluggish. And if we go back to 2007, sorry, no, 2000 and well, let's go back to this place here. There it was at 200 pounds an ounce, and now it's at 14. So it's gone up 7 times. Now, back in 2000, I don't know what a UK property would be worth, but what you know, if you'd put down whatever your deposit was, it would have made more than 7 times. So I still think that that even though gold is a really good trading tool, it's not actually a great investment in comparison to some of the others out there. Okay, I think we're pretty much done anyway, mate. Unless there's any questions out there, mate. I haven't really got too much else.
I can now see YouTube finally. Right. Now that we're nearly finished. But thank you, JC, for the levels, mate. Yep. And now I have those. Good question, Lewis. What is the reason to trade dollar yen on the weekly instead of M30, where a setup may be present soon? No drama with trading it on the M30 at all. But I think the one thing I probably need to make clear is the way I trade. And I trade setups. If there's a setup, I trade it. No setup, don't trade it. So I'm not actually trading a position as such. I'm trading if X does this, then I want to do Y. So it's a bit of cause and effect, if you like. So let's take a look at that. On the weekly chart, I see a setup. So the setup for me is off the top, lower high, break, lower low, lower high.
We haven't got your screen, buddy.
Oh, sorry, mate.
That's okay.
Okay. So if I was a position trader and my bias is short, I'd simply wake up in the morning and go, okay, my bias is short, bang, I'll put an entry short. I'll go into the market now and I'll put my stop loss up here somewhere. And in 6 months' time, I'll come back and have a look at it and see how it's going. That's not the way I trade. The way I trade is I look for a setup. And if I've got a setup, as I said, I'll trade it. If I don't, then I won't. So on right now, the setup that I see is, as I said, off the top here, lower low, lower high, lower low, lower high, rejection bar off the monthly pivot, off the top of this little channel that we've just put in today. So to me, if I'm right, then the sellers will resume control here. And the point at which they'll resume control, in my opinion, is this point here underneath this candle, because this is still a bullish bar, right? Or it's arguable. And we probably don't need to go into that argument, but it is a bull candle that's come off a resistance level. I don't see it like that. I see it as a bear candle because it has rejected that monthly pivot, probably closed on about the bottom of the range as well, this range in here. So I see that as a selling opportunity, not anything else other than that. And I think I say quite often that if it's got a white bodied candle and a high test bar, they're the ones I'm interested in, but they've got to be in context, of course. So I see a setup, I place the order. If there's a setup on the 30-minute chart, then I've absolutely got no problem in trading it either. The problem is I don't have a setup. That's the only thing. If I've got a setup, certainly I'll trade it. The thing with the 30-minute chart right now is I've got high lows and lower highs, as I said before, and many charts are doing exactly the same thing. So yes, it's going to break out of this structure, but I've got no idea which way it's going to break out of this structure. So short term, this could go anywhere, in my humble opinion, including up to the monthly pivot, including new highs. But on the weekly chart, and here's the thing, if it does that and it takes this high out, then I can just rethink my setup then, because it's no longer a setup, because it's no longer the lower high that it is currently. So if the 30-minute chart takes me up here and goes through this level and the bulls really are in charge, then okay, I don't care. I'm not taken into the trade. So the converse, of course, is what I'm after. I'm after the bears being in charge. And for my mind, in the last 1, 2, 3, 4, 5, 6, 7, 8 weeks, that's what I'm seeing. I'm seeing the bears in charge here, not the bulls. So I hope that helps answer that question. More than happy to trade it on the 30-minute chart, but it has to be a setup, it's not a, okay, I've got a bias, I have to trade that bias. 30-minute chart completely could go either way, but not the weekly. Increasingly might even fear real war in the South China Sea, lots of stores closing. Yeah, look, it's a mess, Helen, absolutely. And how that pans out, yeah, good question. Real good question, don't know. My TP, thanks all the guys for Kiwi US dollar. Yep, hope that keeps going south. Problem if you pick the strong supermarkets, they're not me. Looks like I might be done, guys. Hang on. Off, monthly pivot, weekly pivot, 200 EMA. I don't know what the cross is, Helen. Maybe that's not, it's gold, right? Nothing to do with me. Swaps, definitely nothing to do with me. Can we take a look at Euro Aussie H4 price bar between daily pivot and weekly pivot? Euro Aussie, certainly. There it is. H4. Let's tidy this up. Price bar between daily and weekly, looking to short if next two bars, 1 hour retest daily pivot rejection. Absolutely. Was there one? Because there's a false break sitting there. And it happened. Not timely for me, but it did happen. So yes, there's your trade right there underneath that bar. You got it. But that was like 3 hours ago. So the trade's gone. Your TP1's been hit and your target's down here. Yep. Where did I travel on the weekend? I went to a place called, my God, Sisters Beach. Sisters Beach, if you want to Google that, after my trade calls. Where did I travel on the weekend after my trade calls? I'm not sure what that means. Would you consider pound Kiwi double cross at weekly pivot? I'll have a look at that, Ryan. Is there another long-term trade on pound US dollar if it goes back into the box, like I mentioned yesterday? Hang on a second. I'll have a look at that. Where are we starting? Euro Aussie. So we've got, I guess you're asking for SWE if next two bars retest the daily pivot rejection. Next two bars. So back up here again. It's getting a bit messy if we come back up here again, mate, I reckon. I wouldn't trust it. What I would see is probably something like this. If we got back up to here, a big confluence area, but I don't see a setup for me. The setup's already happened. Back under, retest. There's your entry under that candle. So I don't see a setup coming anytime soon. This is getting horribly messy now if we get back to there, I reckon. Okay, so pound Kiwi, H1 double cross at weekly pivot, pound Kiwi. Have I got a pound Kiwi? There we go. On H1. H1, oh, messy. Remember I said the best double crosses are the first time we hit the pivot. This is not that. This is not the first time we hit the pivot. So that's just a mess there. So sorry about that. No, I am not a fan of double pivots now. This is just a horrible mess. So that answers that one. After Lewis, on the situation, if price break the ascending trend line and retest daily pivot of the broken trend line, that will help the setup, though not perfect. That's on dollar yen, I'm assuming. And I'm probably onto that as well. 30-minute chart. Break here, retest the pivots. Yeah, like it. Absolutely. So Lewis is saying if we were to break short here now, in particular, if we broke through the pivots and then came back to retest this area, yeah, I would place a short underneath it. I'd like to take these lows out. So I'd like to get your entry below the lows, Lewis. That would be my counsel there. So break here, retest pivots and the trade line. Yeah, I reckon that'd be a go. Happy days. Where did I travel on the weekend? Sisters Beach after your trade calls. I don't know what you mean there, Helen. Sorry. The situation of price break descending. Right, done that one. Okay, I will. I meant chat after. Chat after. Wow. Helen, I'm so sorry. I'm just not onto it. That's a long time ago.
Probably just very jaded, Helen.
I am. It's like it's 1,000 kilometers round trip. So, and I've just got back. And we did have a few bottles of wine last night.
Of course you did.
Came across a lovely Hobart view from a hilltop. Has an indigenous sounding name. From a hilltop, that is Mount Wellington. If you want to Google that, that's the Aboriginal name. And I can't, Nanangi or something like that it is. Nanangi. Google Mount Wellington Hobart Indigenous, and you'll probably get the name. Hopefully you got it before we close. Last one, Kiwi yen. Kiwi yen. I don't know if I've got a Kiwi yen chart. Okay, it doesn't look like I had. Let's change Kiwi Swiss to Kiwi yen. After you finish it. Why am I not getting it? I'm missing something, obviously. Kiwi yen. There's Kiwi yen. Okay. Review. Okay. Looks like a nice box range, I've got to say. Let's see if we can put that in. Inserts, shapes, rectangle. Where we like to start? Equal highs, start about here, I'd reckon. Equal lows, probably in there somewhere. Okay, so here's the thing. We've got a break and retest of the bottom of that range on the daily chart. The retest, of course, is happening now. It hasn't already happened. The other way to look at that at this point in time is we've come back inside the range. If we were to get a close above the daily pivot and then come back and retest it, that would be the potential for a higher low and a trade to the high side, in my opinion. Let's see if we can pick that up earlier. Back inside, haven't had the break yet, have we? So I can't see a trade right now, but I can definitely see a potential setup. So if you go back to the H4 chart, we've broken through the bottom of the range, bottom of the rectangle. We've come back inside it. Daily pivot is the key level now. I'd like to see a close above it, then come back and retest it and give us a higher low in that vicinity. And that would mean potential for upside. Hope that helps. Yes, a buy option. Back to the box. Yes, at this point. But tomorrow morning, if we get a close, say here somewhere, and this still looks like that, then there's a potential for a short here underneath that one, because that would mean break, retest. So A, B, potential C down here somewhere. So it could change. But at the moment, that looks like it's coming back into that range, yes, and the smaller time frames may well give you an entry long a little bit later in the day. Kiwi, and if closed below daily pivot, can look as break to downside. You could favor that, but I couldn't see myself trading that because I don't have a clean break and retest. A clean break and retest for me is a decisive break followed by a decisive retest, a la the daily chart. Decisive candle breaks, decisive candle retest. So solid body that breaks the level, solid body that comes back and retests it. So I don't see that particular setup on any smaller time frame chart right now. This is just the precursor here is false break at the moment, but that needs to be proven. I need to have a second confirmation of that, and I don't have it at the moment. So it's neither nor or neither or at the moment, but tomorrow morning, as I said, if that looks like that, there's definitely a potential for a downside. How do we see as clean break? Well, exactly as I said, you've got a level, right? Doesn't matter what level it is. It can be a horizontal level. It can be a trend line. It can be a pivot. It can be anything you like, as long as it is clean, as in a decisive candle that breaks the level and a decisive level, a decisive candle that comes back and re-breaks / retests the level. So it's very clean. There's no way you can misrepresent that. It's as clean as a whistle. Bang, bang. That's it. Higher time frame. Yeah, look, if you've got indecision, which you've got in here, right? There's no clear decision as to what's going on because we're getting high tests, we're getting low tests, we're going up and down in the one spot. So that's not clean for me. Then yes, go to your higher time frames. And if it's then clean, then you can trade it. It goes back to exactly the same thing as I was saying to Lewis. I don't have a setup on the 30-minute chart on dollar yen because it's all over the place. But on the weekly chart, I've got a clean setup because it's clearly rejected the monthly pivot. It's a clear lower high after a clear lower low. To me, that's super clear. So if it's nice and clean like that, then I can easily place a trade. I can see it, you know, it's shouting at me, here's what's happening. But the 30-minute chart is not shouting anything at me, nothing. Well, it is. It's telling me there's nothing going on because the daily pivot's in charge here, or both the pivots are in charge here. And until we clear that level, I've got nothing to do. All right, excellent LT. Right, mate, I think that is us. I'll just check the pound trade. Don't think it, oh yeah, looks like it might have triggered. Oh no, it's the weekly chart, goodness me. Okay, there is a difference. No, we're still waiting.
Looks like it's going to go long as well, doesn't it?
Trigger. Well, at this stage, yeah. Oh, a bit of a bullish engulfing, higher low sitting there.
I mean, to be honest, it's after the move to the downside, there may well be a little bit of upside movement in the pound. There's a little report that I've just seen about the UK publishing a Brexit treaty. So, you know, maybe people want to have a little sift through that as well. It's unlikely to keep going lower until the next development in negotiations. So maybe a long's not the worst thing in the world at this stage, mate, on a short term.
Got to be brave though, haven't you? Gee whiz.
Oh yeah.
You've got to have the setup. So question was, could we Euro Aussie B weekly pivot bounce channel on H4? The short-term channel being that one. So break retest, is that what we're thinking, Crystal? Or bounce long to the top of the channel? Maybe that's what you're thinking. Either could happen. And it's exactly the same scenario as we just described. Either we get a clean break and retest, we don't get a break at all, but we get a higher low. So we can trade the higher low. If we get a bounce, we can trade the break and retest if that's what happens, or we can trade the break, consolidate back above, retest, false break. Bounce long? Yep, absolutely. You see, I don't trade the position as such. So if I was either a scalper or a position trader, as soon as I saw that hit this level, well, I'd probably have an order in the market saying a limit long, right? Because that's my structure. And I want to get out here somewhere. So that would be my trade. But that's not the way I trade. The way I trade is what I wait for the bounce to happen and then be confirmed by a higher low. And what that really means is all the higher low is telling you is that the sellers were unable to regain control at that area. The buyers are now in control, and they're going to drive it to probably here in the first instance and probably here in the second instance. So I never guess what's about to happen. I always wait until the market says to me, this is what will happen if we go to there. So if we get the break and retest, I want to trade under the retest bar. I don't want to trade the retest bar. That's not the way I trade. It can be very late into trades. There's no question about that. But I rely more on a win-loss ratio than I do on a win percentage in terms of how much percent I get out of the particular trade. So for that reason, I am taking far less risk, and therefore the win-loss percentage is greater, but the win percentage per trade is far less. And that's the trade-off. High risk, high reward, low risk, low reward. Nothing can change that. That's just the financial rule. And if you find how you break that, please tell me. But I've never found a way. So the bounce long for me, definitely on, but I'd want to see a higher low before I traded it. I hope that helps. Right, mate, that's it. I don't have any short-term entries, so maybe towards the US session it becomes a little clearer on the 30-minute charts. But right now, I'm looking to tomorrow.
Yeah, sounds good, mate. Well, I'm waiting for pullbacks as well, so nothing to do my end. So we'll see what happens in the US show, and maybe there'll be some stocks out there to trade as well. We'll see. But thanks everybody for joining us. We'll be back same trade time, same trade channel tomorrow. Ash, is the UK a short in the making? Possibly, Lewis. I did look at that. It's possible, mate, but it's pretty confident today, isn't it? But yes, it is a short in the making. There's no two ways about that. I'll cover that a bit more in the US show, and we'll have a look at what we need to see for it to be a shorting opportunity. At this stage, we've got to look long, but let's see what might transpire, and it might even be that we speak to Jeff about what might be available later on, because it could be a false breakout here. So we will cover that later on. You are more than welcome, Helen. More than welcome. We will see you all tomorrow, same trade time, same trade channel at 5 to 8.
That's the date. Don't be late. But Brian, it's always better if there's a confluence. Absolutely always better, but not 100% necessary in this particular case, because you've already got the confirmation in that higher low. Don't be late. That's the date.
See you guys.